Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Tuesday, April 22nd, 2025. Today's episode begins with the headline, Extreme Fear Reigns Unopposed. Robschild, stocks have gone down a bit and it seems like things are cooling off a bit. Hold your horses. While headlines celebrate today with the S&P 500 going up 2.5%, which is normally a very large move in the S&P 500, just this chart pattern alone shows us that we are definitely not looking like we're in a bull market of any kind, not yet. Add to this the CNN Fear and Greed Index, which uses various momentum and breadth indicators. We are still in extreme fear mode now. Not even in fear mode, extreme fear mode. Add to this something I like to track that I bring up on the show sometimes from PY investing. This is a mathematically ruled based strategy to try to keep you out of experiencing as much volatility as you might otherwise experience. This is still almost 50-50 cash and stocks, and so this is still highly elevated. This chart right here goes back to 2008, and you can see spikes like this are, they're not super common. We are in panic mode still, guys. On the same website, it tracks the S&P 500, the black line performing against the way this rule-based way of investing works. And since the great financial crisis, if you had simply just stayed in the S&P 500, you would have outperformed. However, since 2008, we've never had a really major, prolonged bear market. We had no recession, nothing. And so, as you can see, before the great financial crisis, during it, this method outperformed it for quite a while after the great financial crisis, until the bull market just continued to go up and up and up. It really was breaking even up until 2015. So 7 years of tying basically after outperforming a bear market. So if you're expecting a big bear market to happen, this will outperform the S&P 500. That's what it's designed to do. If we get like a recession or a depression that lasts a year, 2 years, 4 years, 30 years, this will outperform. I also like to sometimes take a look at what's going on with the put-call ratio. And while usually, you see bottoms while everyone's buying puts, when everyone is buying contracts that make them money if the market continues lower. When that's maxed out, that's when the market bottoms and goes the other way. So what's going on right now, we are at sort of a peak in the put to call ratio, but nowhere near major peaks of major bottoms that we've seen in the past. And with the kind of volatility going on right now, I don't see this as a time to celebrate, and I see a lot of room for the put to call ratio to go much higher before we can confirm any type of possible bottom. Also, junk bond credit spreads, although tightening recently a little bit, this is not the kind of thing that's looking like it's going lower and lower and lower. In fact, it just looks like a little breather in midst of a spike. And when we scroll out on this, we can see that that happens often going into major financial crises. Add to this that the pricing of options contracts is still in the house is on fire mode above 20 all the way up at 30. Obviously, the VIX futures curve is in full backwardation. In order for a healthy bull market to continue, the VIX must cool off here. We need to get below 20. And as it stands, we're consolidating here, which can go eventually below 20, but it also has a very decent probability of spiking to the upside. And while volatility tracks possible large movements up and down, typically the move up, you take the stairs up and you take the elevator down. That's why when you see spikes, giant spikes in the VIX, it tends to correlate with major corrections or bear markets, absolute chaos going on. Also, at market bottoms, you want, that's typically at the peak of the VIX, and I'm not convinced we've seen the highest peak yet. While it's always possible that it's a good time to buy stocks, I do not think so at this time. And that doesn't even include my daily reminders, which we'll get to in a moment. Before that, community topics. Again, I love hearing what you guys are doing. I'm finding out about ticker symbols I've never heard of before. Let's turn this comment section into a investment forum. Feel free to share any moves that you make, that you've made today. I didn't make any moves myself today. Robschild sits on his hands. Coming up later this week, this month, this year, continuous tariff chaos updates. Before we move on, thank you for watching, subscribing, commenting, and supporting. No changes in the daily reminders. They are fully explained on a website in the description labeled Daily Reminders. I highly recommend, if you're not familiar with these items, to read through it. Also, no major changes in the crystal ball ratings or Robschild portfolio, although I noticed my long duration T-bond is probably more accurately at around 52. The last time I updated it, bonds were a little higher. The rest of this is fairly accurate. This might be a little higher at this point, maybe 3 to 9%. On to the charts. We already looked at the S&P 500 and the VIX. And I wanted to start with Bitcoin. Yesterday, I mentioned how it looks like we were headed to the $92,000 level, and that's where we are at today. That's just simply a measured move of this bull flag here. That was pretty easy to see. Not something I was interested in participating in. Again, I'm more interested to short Bitcoin when it goes up right now. I'd be willing to buy Bitcoin at a 40+% discount. That's just how I play it. I'm not interested in trying to chase things higher. It's just not how I play the game. But it's fun to watch these patterns play out like clockwork and be correct about them for sure. And I have no idea where Bitcoin's going to head from here. I'm hearing other chartists say we're headed actually to around 95,000. After making multi-year new lows in the dollar index DXY, we actually had a bounce today, which surprised me. I was actually thinking that this was kind of like a waterfall event, and so now there's more of a chance of going sideways after today. There are rumors about potential deals with China now, which can, just turn everything on its head. So we'll see what happens. I don't think that stops the rest of the tariffs. The tariffs are still here, so I still don't see much setting the market back into bull mode at this point, especially considering all the things in the daily reminders, especially the most recent consumer sentiment report. We're at like record lows right now. Like, people have never felt worse. Anyway, add to that the leading indicator that leading economic index that just came out. Sometimes I like to think of Mr. Market as someone standing on cracking ice at this point, and I feel like his dog fell in the water and he's still standing on ice and it's cracking, and that's what it feels like to me anyway. Next, I wanted to bring up gold. I started a short right here, April 11th, around 2,300, and then yesterday I added to my short around the 3,400 level. Today's candle has a very large topping tail on it. We hit basically, what was the high of the day? It was exactly 3,520 cents. It would be interesting to get the perspective of the one person that purchased gold today at $3,500.20, especially if this really is like the top and the resistance. I'm hearing chartists talk about 3,500 and 3,600 as being probable not all-time tops, but tops before we get back down to this 2,900 level. So I'm actually in the money on my gold short, by the way, after purchasing there and then doubling it here. With it just going down this much, the whole position is actually in the money. It's up. It's a shorting of gold miners, which isn't an exact correlation to this because it represents businesses that are making money off of finding gold in the earth and selling it. So They're definitely not going to track each other 100%. Last chart of the day, I want to bring up SMH, the Semiconductor Index. I'm just going to say this is another, I have a pretty large short actually on this with a fund SOXS, large-ish I guess, as far as short positions go. We are consolidating. We're still below this neckline after cracking it and after confirming, and so it's still looking bearish as heck. And you know, Wall Street likes to follow the semis. This is a major leading indicator of where things might be headed. This chart is looking really weak, so that's where we are. One last thing I want to bring up today, 30 seconds before Elon Musk talks at the conference call of their earnings. I think their earnings came out earlier today. Thought it was supposed to be after the bell, and I thought they came out weak by what I looked up, and the stock went up 5% today, and now in anticipation of him speaking, we're up another 4%. So that could be entertaining for those of us that are interested in, you know, the finance world and all of that. Anyway, that's all for today. That's all for me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.